morning movers. So Diane, this is a great note. I mean, I always love a bullish shake on a day when we're lower because you need some optimism, but $4 trillion. It felt like we hit 1 trillion fast, but 4 trillion, hypothetically speaking, has felt even faster.
I know. I want to say to Dan, I want to pick up the phone and call him and say, why stop at 4? Why not 5 here for NVIDIA? Because look, to be fair, NVIDIA is at 3.76 trillion or thereabouts right now. So 4 is not that far away when you consider where it is currently. And it's had quite the run, especially when we think about where we were back in April. Off a little bit today. But again, we have some broader weakness as investors do a reset at the beginning of a new month. But the bulls may not have the reins for the day, but the view from Wedbush is, quote, our bullish view is that investors are still underestimating the tidal wave of growth on the horizon from the $2 trillion of spending over the next 3 years coming from enterprise and government spending around AI technology and use cases. They also say this, quote, in our opinion, after a relatively strong few months navigating tariff and geopolitical storms, now tech stocks are poised to see another 10% plus move higher in the second half of 2025, led by the tech winners in this golden age for the tech world. So Dan has been tweeting about this or posting, however you call it nowadays, on social media today. So seeing some more momentum to come with NVIDIA. And so, he talks about NVIDIA in terms of it being a key play. He talked about Microsoft as well, but NVIDIA, he calls it the foundation for the AI revolution. The only game in town from an AI chip perspective, driving enterprise AI adoption and infrastructure, just when we think about the build outs around there. And he's often called Jensen Huang the godfather of AI. Some argue that title belongs to someone else, but we won't split hairs on that one. Jensen is certainly a front runner in this space. He talked about his unmatched insight into current and future AI demand. And obviously the future demand is what matters the most when it comes to getting to $4 trillion or beyond that. He expects both NVIDIA and Microsoft to join that club, essentially create a new club this summer, fueled by the momentum and just overall spending we're seeing, the CapEx that we're seeing right now. And then he just expects this overall multiplier effect across tech. For every dollar spent on NVIDIA, he estimates there's an $8 to $10 impact across the broader tech ecosystem. And whether we're talking about hyperscalers, cybersecurity, software, internet platforms, etc.
Cantor Fitzgerald has maintained its optimistic outlook on the semiconductor behemoth by reiterating its overweight rating and setting a $200 price objective for NVIDIA. Data indicates that NVIDIA now has a $3.85 trillion market capitalization and an outstanding overall financial health score. According to Cantor Fitzgerald's analysis, the stock has had a lot of volatility in 2025, rising to a 52-week high of $149 on January 6th, before plunging 37% to a 52-week low of $94 on April 4th. The assessment, which displays the stock's beta at 212, suggesting stronger market sensitivity than average, is consistent with this volatility. The Philadelphia Semiconductor Index, SOX, has increased 11% over the same time period, while NVIDIA shares have grown 17%. On June 25th, NVIDIA shares reached a new all-time high of $158. Growing analyst confidence in NVIDIA's future success is reflected in the 10% increase in consensus projections for the company's earnings per share for the calendar year 2026 since the year began. According to the company, NVIDIA's current price-to-earnings ratio is 27 times its anticipated CY26 earnings per share, which is less than its typical range of 32 to 40 times for the following 12 months. In other recent news, Sandbox AQ, which uses NVIDIA's hardware to create synthetic data, has published a sizable AI-generated dataset to speed up drug discovery by forecasting drug-protein interactions. The pace and precision of pharmaceutical research could be greatly improved by this advancement. To increase productivity in challenging situations like spacecraft docking and on-orbit inspections, Northrop Grumman is extending its usage of NVIDIA technology to develop AI applications for spacecraft operations. To improve its space solutions, the business intends to include these apps into the NVIDIA Omniverse simulation platform. Additionally, a blog post from NVIDIA highlighted Syngen Inc.'s usage of the company's Isaac platform to create autonomous industrial vehicles. This mention precedes Syngen's technology demonstration at the Automatica 2025 trade exhibition. Following a Wall Street Journal piece that raised concerns about possible violations of local laws, Malaysia's trade ministry is also looking into rumors of a Chinese company employing NVIDIA AI processors in the nation. Finally, Elon Musk revealed that Grok 4, The next iteration of his AI model will be available soon after July 4th. The model, created by Musk's business xAI, is nearing completion and will require one more major iteration for a specialized coding model before going on sale. These new achievements are indicative of continuous progress and cooperation in the fields of technology and artificial intelligence. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
When you speak to others, is it the same sentiment? Maybe not as outwardly bullish as at Dan Ives, but outside of maybe Broadcom, I mean, it doesn't seem like there is an alternative to exposure to an NVIDIA right now if you want exposure to this space. You mentioned Microsoft. I mean, Apple basically threw in the towel yesterday. Alphabet's basically thrown in the towel as well in terms of those projects. Tesla's got its own things it's working on, but it's got its other struggles as well. It really does kind of feel like NVIDIA is the only game in town. Is that the same sentiment you're hearing from others?
Not necessarily that's the only game in town, but it is the leader and so much the front runner. That's what I'm hearing when I talk to different analysts who are, bullish on NVIDIA. It's just because of their clear positioning within the space. And, one of the phrases I heard today, it being a heavyweight in the category. So it's got such a clear lead and so much command, essentially the Goliath in that space. Now, we know what happened with Goliath, so maybe eventually there will be a David that takes down Goliath, but so far that does not seem to be a concern, considering how many view this as still the early innings when it comes to AI and Gen AI and even Agent AI and build out there. So again, when we think about the hyperscalers in the space and just, for instance, like AWS or Google Cloud, they see them benefiting from the growth of NVIDIA. So it just, the rising tide lifts all boats in this space, but NVIDIA, the front runner. And Dan sees this as, look, the tech bull market still, again, in his point of view, in the earlier innings. He sees this push for $4 trillion, and who knows, maybe we'll have a conversation with him soon about the next milestone after that, Alex and Jenny.
I know, I've got to applaud him for the fact that even in spite of all the negativity, he was still, the tried and true bull in the overall tech space. So he was seemingly right, because NVIDIA is a freight train that you do not want to get in front of when it starts moving with momentum.
Bank of America reaffirmed its buy recommendation for the stock. According to the company, NVIDIA is a major contender in the fight for autonomous driving. Adoption of AV could help NVIDIA, a leader in the accelerated compute field. We anticipate that the requirement for computing power and AI training models on the car will increase as the automotive industry moves toward automation and electrification, which will provide NVIDIA with more opportunities in AVs. The stock presently has a consensus buy recommendation from Wall Street analysts. A 13% upside is implied by the average price target of $175, but a 61% upside is implied by the street high objective of $250. With platforms for data centers, self-driving cars, robots, and cloud services, NVIDIA is a leader in AI-driven solutions. Humanoid robots are one of the new development vectors in industrial and sovereign AI that are being made possible by NVIDIA's commanding 70-95% market share in AI accelerators. Regarding sovereign AI, numerous governments worldwide are racing to establish domestic AI systems in an effort to boost productivity in both the public and private sectors. AI is currently viewed by every country as the foundation of the next industrial revolution, a new sector of the economy that generates intelligence and vital infrastructure. To improve their digital capabilities, nations are vying to develop their own national AI systems. Together with Foxconn and the Taiwanese government, we announced Taiwan's first AI factory at Computex. I was in Sweden for the first national AI infrastructure launch last week. In order to empower startups, enterprises, and society, countries such as Japan, Korea, India, Canada, France, the United Kingdom, Germany, Italy, and Spain are currently constructing their own AI factories. NVIDIA's new growth engine is sovereign AI. Similar to how they used to invest in the internet and electricity, countries are now investing in AI infrastructure. Regarding industrial AI, a number of European manufacturers have contracted with NVIDIA to construct industrial AI clouds, which will allow industrial businesses to approach business more productively and efficiently by prioritizing AI simulation in manufacturing. As of Q1 FY26, these geographic markets outside of Taiwan now account for 24.2% of the total revenue mix and are expanding at a quick rate of 87% year-over-year. Over the next 2 years, I believe these growth drivers can raise this revenue mix to at least 30%. As everyone is aware, over the past 2 to 3 years, artificial intelligence has both increased and, yes, disrupted the productivity of white-collar jobs. Since I think the same transformation is set to occur in blue-collar industries like manufacturing with robots, we are now entering the next wave. NVIDIA Technology CEO Jensen Huang stated, "We're working towards a day where there will be hundreds of millions of autonomous vehicles, billions of robots, and hundreds of thousands of robotic factories that can be powered." Even while they only account for 1% of NVIDIA's current sales, there are multi-trillion-dollar prospects for the company. The most important advancement for us investors to keep an eye on is NVIDIA's Isaac GR00T Foundation model, which is intended for humanoid robot reasoning. Globally, next-generation factories and humanoid robotic systems are powered by industrial AI, from training to digital twin simulation to deployment, thanks to NVIDIA Omniverse and Isaac GR00T. Blackwell has been the main topic of discussion surrounding NVIDIA over the past year. As NVIDIA moves closer to enabling a world powered by humanoid robots, I believe that during the course of the next 2 years, attention will turn to Isaac GR00T. In my previous NVIDIA video, I discussed how CEO Jensen Huang feels that most analysts' predictions do not adequately quantify and account for the growth factors associated with the AI factory that are brewing within the company. As a result, I believe that the blowout revenue guidance surprises that occurred in 2023 might occur again. When NVIDIA begins to meaningfully commercialize on these potential, I anticipate this to take effect. Although I am pessimistic about it due to poor execution headwinds, one of the most important lessons I have learned in my years of investing is that concentrating only on PE ratios, whether they be trailing or forward, does not work for stocks with large, trillion-dollar-plus growth options like NVIDIA, Palantir, or even Tesla. This implies that early withdrawals from these companies owing to valuation concerns may result in significant errors. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
So we started the month with kind of some mixed action. It seems like investors were kind of regrouping as we set up a new month, a new quarter, second half of the year. What did you make of how the month started, Tom?
Yeah, Diane, I think the rotation trade, probably a long time coming. You got to remember that we had the Russell rebalance, we had the S&P 500 rebalance at the end of the quarter, end of the month, at the end of June as stocks were hitting all-time highs. So not surprising that investors were out there not getting out of the entire market, Diane. They sold off big tech. Most of the Mag 7 was down pretty significantly yesterday, but they pushed into names that have been beaten down. If you take a look at some of the staples stocks, real estate, which had been under pressure, you look at names like Target was higher yesterday, General Mills, a lot of these companies that have not participated in the rally that we've seen, and maybe that's due to the underperformance in maybe the Dow and the Russell 2000 so far compared to the Nasdaq and S&P 500. I think that's one of probably the key takeaways to kick off the second half of the year was that, hey, investors weren't selling everything. They were selling some things that had been big winners, maybe taking some profits post that quarterly end on Monday, and then reinvesting that into names that have severely underperformed. I was just going through some of the staples, consumer discretionary names. We're catching a bid yesterday. So that's nice to see. But at the same time now, what's next coming up for the markets when you're seeing overbought levels on a technical basis for the S&P 500 and the Nasdaq, even with that pullback yesterday?
That's a good point. So, yeah, the Mag 7 under some pressure yesterday across the board. If you look at them as a basket, losing about 1.5%. So, to your points, maybe some of that was taking profits. But at the same time, we've had these conversations with different experts who said, they expect to see some of a rotation trade. So maybe it's the beginning of something like that. When you think about the catalyst next, when you think about where we go from here, is it about earnings next, or is it about some of the economic data?
Well, I think it's going to be about the data. You know, it's almost like the market's built in this theory, Diane, where, hey, if the data starts to weaken, and we get more housing data here in about 10 minutes with the ADP report, JOLTS was a little better than expected yesterday. Non-farm payrolls tomorrow in the holiday shortened week. But the Fed's almost got this put built in where, you know, Jerome Powell's not signaling a cut for July. Maybe some of the other Fed members are. But he's going to stay on that course where until he starts to see that jobs market, that data start to crack a little bit. And if it does, then he's there with a rate cut in July if that does happen. If we do see a turnaround in some of the jobs data, I think that's going to be the key for them because inflation's under control. Yeah, they're expecting a little bit of a tick up here in the next couple of months here, and that's why Fed Chair Powell stood pat on his, we're just going to stay right here right now at this point. But he did mention yesterday at that conference in Sintra, Portugal, that, hey, they're still open to any rate cuts. They're just going to follow the data. So that's probably a positive. And then you got earnings season, Diane, that starts in a couple weeks here with major financial companies. Post those stress tests, you looked at some of the moves by some of these companies. JP Morgan put $50 billion buyback in. Morgan Stanley, $20 billion buyback. They're all hiking their dividends. That's a positive for the overall economy. The banks are at the front line of what's going on here in the economy. And, when they're doing buybacks with their share price at these levels, that's a confidence builder, I think, for the investors out there. But, and then also you look at the technical side of this, 80% of the S&P 500 companies are above their 50-day moving average. Now it's starting to get frothy. I mentioned this about a week and a half ago on one of our shows earlier where it was about 65, 70%. Now it's about 80% of the companies are above their 50-day moving average. So we're getting frothy, not only on a technical basis, but the optimism in the market where anything can trigger it. Any negative news could trigger this market to sell off pretty significantly, but that hasn't happened yet, and who knows if it will.
CEO Huang has informed investors that the company's future projections will not include the China market, which accounts for a respectable 12.5% of total revenue coupled with Hong Kong, due to the impact of export control restrictions. I therefore anticipate that the market's projections will take into account China's reduced revenue contributions. In addition, I think this would create a chance for unexpectedly high Chinese revenue. This is because NVIDIA is still making a lot of effort to provide lower-end, more affordable models, even as it is devaluing the influence of Chinese sales to investors. Actually, according to some accounts, mass manufacture of these Chinese-made goods began as early as June 25th. Although this difference is anticipated to close in the next 1 to 2 years, keep in mind that these less expensive Hopper and Blackwell chips are still superior to the best substitutes from China at the moment. Within a year or two, domestic Chinese technologies such as Huawei should be able to match the computational capabilities of reduced versions, according to White Oak Capital Partners semiconductor specialist Nori Chiu. According to CEO Jensen Huang, firms like Huawei Technologies have grown quite formidable. Overall, I believe that over the coming quarters, there is room for positive surprises in China. After that, though, we should presumably anticipate that competitive pressure will come into play. There have been various gross margin adjustments for NVIDIA during the early stages of the Blackwell chips ramp. However, the CFO's guidance for mid-70s adjusted gross margins by the end of the year suggests that the company is currently moving in the direction of a better, steady place of yields and utilizations. We spent a significant portion of the first and second quarters bringing Blackwell to market catching up, but we have now reached a rather stable ramp. And as we increase the volume, we will be able to improve those gross margins by working on the yield plus cost combined, among other things. CFO Colette Kress stated, "Yes, we do see that path towards the mid-70s before the end of the year." In terms of gross margin guidance expectations, it appears that consensus projections have so far been overly optimistic during the Blackwell ramp. Furthermore, it appears that the recent trend of inline gross margin guidances, or marginal misses, is producing consensus forecasts that do not yet reflect management's perception of mid-70s gross margins. Key hyperscaler clients of NVIDIA, like Google and Microsoft, are attempting to insource their own chips in an effort to lessen their dependency on NVIDIA and save money, or at the very least, establish a stronger negotiating position. I am aware that the stock of NVIDIA may be at medium to long-term risk, The good news is that at the moment, NVIDIA's chips are the best. For instance, the Braga AI chip from Microsoft is experiencing production delays of 6 months, and even when it is finally scheduled for sale in 2026, its performance specifications are anticipated to fall far short of those of the Blackwell chips from NVIDIA, which were introduced in late 2024. Additionally, there was news that Google's tensor processing units, TPUs, are replacing NVIDIA CPUs in OpenAI. This was discovered to be overstated, though, as OpenAI is currently just evaluating a small number of Google's TPUs and has no plans to deploy them widely. However, since testing comes before any bulk purchasing, we should acknowledge this as a legitimate risk that can be tracked. NVIDIA keeps discovering new strategies to expand into untapped markets. I discussed the potential of AI agents in my most recent video. That's still going on. Additionally, there are new trillion-dollar or more potential growth drivers in the form of sovereign AI programs and the industrial sector's adoption of AI in applications such as humanoid robots and manufacturing simulations. NVIDIA is well positioned to profit from its leading position in the AI accelerator market. As the company navigates export restrictions to continue selling lower-end models to China, I also see room for revenue and margin beats driven by higher-than-expected China revenues in the upcoming quarters. Additionally, I anticipate improved yields and utilizations in the Blackwell production ramp in H2 FY26. Surprisingly, valuations are lower than those of important semiconductor peers. Additionally, I believe there is a significant probability that we will witness a breakthrough to the upside given the healthy bullish momentum, even though the NVIDIA vs. SP500 ratio prices are near a monthly resistance level. Attempts by important hyperscaler clients to outsource are a major risk to be aware of. In the worst situation, this might result in revenue headwinds and strain NVIDIA's gross margins. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.